A lot of people want to invest in real estate, but they automatically assume that that means rentals. Buy a house, find a tenant, collect rent, build wealth. And don't get me wrong, that can work amazingly, but rentals are not the only path. Raw land is a very different real estate strategy that has a very different cost structure, workload, and risk profile. So in this video, I want to compare raw land and rentals honestly and help you think through which one may fit you better in 2026. Now, I'm not here to tell you that rentals are bad. Again, I have rentals, and rentals have made a lot of people very wealthy. They can provide income, appreciation, tax benefits, debt paydown, and long-term wealth. But rentals also come with tenants, repairs, management, financing, insurance, taxes, and ongoing operations. Land is different. Now, it does have its own risks: access, zoning, utilities, flood zones, wetlands, title, buyer demand, and pricing. All of those things matter. But the day-to-day ownership model is much simpler because there are no tenants, there are no toilets, there are no roofs, there is no HVAC unit, there are no unit turnovers to worry about. So the question is not one of which is universally better. They both work, they both fit. The question is which one fits your goals, your capital, your risk tolerance, and the kind of work that you actually want to do. So let's go into comparing them. The first comparison that we're going to talk about is cash flow. A rental properties can generate monthly rental income. That's why people buy them, right? And that's the appeal. But the real cash flow with them is not rent minus mortgage. You have to account for vacancy, repairs, maintenance, capital expenses, management, insurance, taxes, and turnover. So the cash flow may be strong, or it could be much, much more thin than you expected it. Now, land creates cash flow completely differently. Raw land usually does not produce any rent while you hold it, but it can produce cash flow through owner financing. You buy the property at the right price, you sell it to a buyer with a down payment, and then they get monthly payment. You have monthly payments coming in. Now you have monthly income without anyone living in a structure on your property. Now, that does not mean that owner financing with land is automatic or risk-free. You need the right buyer, you need the right paperwork, you need to service it, the prices needs to be right, and very importantly, you need to have in the right default terms. But the cash flow mechanism is different. Rentals rely on tenant occupancy. Land relies only on the payment structure. Our second comparison, management. Rentals usually require ongoing management. Even with a property manager, the property needs oversight. Tenants call, repairs happen, leases renew, units turn over, expenses need approvals, management statements need review. If the property underperforms, well, that's your problem as the owner. With land, the management is much later. There is no tenant, so there are no maintenance calls. So there is no broken appliance. There is no leaking roof. There's no eviction process. And that's one of the biggest reasons that we like land and we like to finance it. See, the work is shifted to the front end. You find the seller, you analyze the property, you do your due diligence, you buy it correctly, and now you can sell it correctly with owner financing. Now, everything I just mentioned obviously still takes work, but it usually does not have anywhere near the ongoing property management workload that a rental requires. The third comparison we're going to talk about is risk. Now, again, both rentals and land have risk. Any real estate, any investment has risk. And if anybody tells you otherwise, they're just feeding you a line, okay? Anytime you invest money in anything, whether it's precious metals or stocks or crypto or anything, there is some risk, and real estate is not immune to that. So rental risks include bad tenants, repairs, vacancy, insurance that can go up, taxes that increase, local regulations that may change things, financing risk, the local HOA doing something, market cycles. Now, land risks include bad access, unclear zoning on what's going on there, a weak buyer demand in the area, if it's in a flood zone or a wetland, title problems on the property, poor pricing, and overestimating the value. So the question is not which one has risk. Again, they both do, as do all investments. The question is which risks you understand and which ones you're willing to manage. With rentals, you need to understand the building and the tenant side. With land, you need to understand the property and the exit side. Now, a rental may look safer because, well, there's a house on it. But if the numbers are bad, the tenant is bad, or the repairs are heavy, then what just looked like that safety blanket is actually a liability. Land may look simple because it's vacant. But if it has no access, if there's no buyer demand, then again, it can become a bad deal very quickly. So due diligence matters in both. Our fourth comparison is going to be capital and financing. Rentals often require a larger down payment, lender approvals, inspections, insurance, and ongoing reserves. Financing can be a benefit because you're getting leverage then, and leverage can help build wealth. But leverage also increases risk if the property does not perform, right? You still are liable for those payments to the bank. Now, land is often harder to finance through traditional banks, especially when it's raw land, which is a lot of what we deal with. So that can be a challenge. But challenge creates opportunity because many buyers cannot easily go get land loans, while owner financing now becomes much more valuable. You are providing something that they can't get elsewhere. So as an investor, you may be able to structure the deals through cash purchases, partnerships, seller financing, double closings, whatever it is, right? There's a lot of different exit strategies when it comes to land. And again, I'm not saying that one is automatically better than the other. They're different. Rentals often use institutional financing, while land often uses the deal structure, which is what we provide. So let's go into our fifth comparison now. This is a personal thing as to who each strategy actually fits. See, rentals may fit you better if you want long-term holds, if you want debt pay down, if you want tenants, if you want physical improvements, if you want that traditional real estate ownership that everybody puts out there. But with this, you should be comfortable with management, repairs, financing on those ongoing operations we spoke about. Now, land may fit you better if you like deal finding, if you like seller conversations, if you are good with due diligence, figuring out pricing and numbers, and then your exit strategy. So you have to be comfortable with research, marketing, and analyzing these properties before you actually buy them. Now, if you hate tenants, if you hate repairs and property management, then land is probably the better fit for you. If you want that more traditional buy and hold model and are prepared for the operational side, then rentals might be a better fit for you. So the point is to choose based on reality, not some sort of hype that's out there. And again, we see a lot of that, right? Because everybody looks or makes houses look like it is the in thing, the thing that you need. But the reality is, it's really just investing smartly and knowing which way you want to take your investments. That is the wise decision. So why do we focus on land? Well, it gives us a way to participate in real estate without a lot of headaches that do come with rentals. We don't have those tenants. We don't have those toilets. We don't have those rehabs. We don't have those late night maintenance calls that we spoke about. We don't have to worry about those unit turnovers. And we still create profit through discounted acquisitions. Then we sometimes have cash resales, owner financing. Sometimes we subdivide the property. Sometimes we do entitlements on them and other exit strategies. But we also respect the due diligence process. We don't buy land just because it looks cheap, right? We want to know things about it. We want to know the access, the utilities, the zoning, whether or not it's in wetlands, what the title situation is, how much the taxes are. Is there actually any buyer demand? Do people care about it in this area? What is our pricing going to be? What's our exit strategy going to be? And that is where the business is. So many people focus on just buying dirt. It's not buying dirt. It's buying the right dirt. And not just the right dirt, but the right dirt at the right price with the right exit strategy. So a lot of people are struggling in land right now because the market has shifted so much, right? What worked a few years ago does not work the same way today. Buyers are more cautious. Bad properties tend to sit longer. Even good properties tend to sit longer. Pricing matters more. Due diligence matters more. And those seller conversations matter more so that you can actually get more deals. And so that's why we are putting together a live 5-week training focused on what's actually working right now. Our current marketing, getting agreements signed, evaluating properties properly, finding value that other people are missing, and then how to sell them in today's market. It's a small, live session that we're doing together. It includes direct question and answers so that we can work through your actual questions and situations that you're dealing with in your business. So for investors that want more direct help, the link to schedule a call and talk about this is in the description. No pressure, just a conversation to see whether or not this fits with what you are currently doing. Another thing that I want to mention is, because I've been talking about due diligence so much in this video, is that we do have our free due diligence playbook for anyone evaluating land deals. It walks through all the things I talked about: access, zoning, flood zones, wetlands, title concerns, pricing, buyer demand, usability. So again, grab a copy for yourself. The link is in the description. Again, it's free. Just go there, enter your information, your email, and it'll be sent to you. And again, I'd like to hear from you. I love to know the feedback of what people are thinking based on what's going on out there right now. Would you rather own rentals or land, or do you like a combination of both? And for whatever the answer is, land, rentals, or both, let me know why, because I'll respond to every comment. I really want to see where people are thinking right now in 2026. So I'll catch you in the next video. Thanks for joining us.